Let's touch base with Jonathan Schiessl, who's the Chief Investment Officer at Ashburton Investments, to talk about his market philosophy. Jonathan, it's great to have you on the show. Thanks very much for taking out the time. Your report, which caught our attention, was highlighting that this is the time to start adding mid-caps in the Indian market. What's been your rationale for the same?
So I think the reality is, as we all know, there's 5, 8 stocks where the market is herded into these, monumental the Reliances, HDFCs and TCSs. And if you look at the charts of some of those stocks, they are quite eye-watering. They've just gone north and don't seem to want to catch a breath. Now, whilst I can understand some of the motives behind that, the reality, if you look at the global macro situation, yes, it seems, Trump and Mexico have come, or the US and Mexico have come to some sort of arrangement. But the reality is the globe is slowing down. And therefore, do you really want to be positioned in a lot of these big cap stocks, which are quite reliant on what's going on from a global perspective, be it from pricing or demand? As we know, there is this gradual recovery coming through in the domestic economy within India. And you've also seen, obviously, this brutal sell-off in the mid and small cap space. So, I think positioning, herding is happening at the moment, and it's just pushed everybody into these mega cap stocks. But I think, is that really the right time? As I said, I understand some of the motives behind it, but I think now you are beginning to see some value emerge in some of these smaller stocks, albeit, they were trading at very rich valuations not that long ago.
Typically after this kind of a spell of a big move in the large caps, how much do you think mid-caps can take to come back and join the rally? When do we see that catch-up happening?
No, it takes time. The technical damage that's been done to some of these mid and small cap stocks is pretty brutal. There'll be a lot of stale bulls in these stocks who will want to, exit the moment they see a bit of price rallying going on, just to get out of some of these smaller liquid counters. So the reality is the recovery of this space, you might get, immediately some short 20, 25% upward moves, which are very profitable if you can buy at the low. But the reality is it takes some time to correct the technical damage which has been done into that space. So I think, that there will be pockets of rises. There'll be, times when these things come back again. So I think there is time for, accumulation of quality positions in the space because the damage has been so brutal.
Jonathan, urban-related versus rural companies, which ones you are tracking, mainly from your portfolio? When you speak with them, what's the sense that you get about demand trends? Is it either or do you think the trend is picking up for both categories?
So I think we definitely get the sense that what we're seeing is an uptick in revenue growth. There does seem to be an increase in corporate confidence. We're seeing private capex beginning to pick up. But I think also on the other side, there's still elements, pockets of stress. There's still certainly issues about rising input costs. And obviously, if you look at what the rupee's been doing, then the adjustment that's going on in India is happening via the currency. So effectively, you've got diesel prices at all-time highs. You've got rising input prices, and ultimately that will calm down some of the consumption story that we've been seeing. It's not going to, destroy it, but it'll certainly probably take the gloss off it a little bit in the months ahead.
Where would your bets be concentrated? Would it be consumption, or would it be now the cyclical stocks?
I think each stock has to be looked at on a case-by-case basis. The reality is the consumption story is one of the best stories when one looks at India. And I'm not saying that's going to be derailed. I'm just saying perhaps some of the gloss will be taken off the top. Clearly, you have a premiumization story going on in the Indian consumption space that has many, many decades to run. So the consumption story is still one of the best stories available to invest in India. But obviously, some of those stocks are reflecting that, and they're trading at super premium valuations. So, it has to be on a case-by-case basis. But as I said, if you look at what's happening to consumers, the money in their pockets as such, they are under some pressure from rising input costs, be it diesel prices or other prices.
Right. What are the top names you've been adding during this market correction?
Yeah, look, I mean, some of the recent additions we've done over the last couple of months. Future Consumer is a name that is an interesting name. Obviously, linked to the Future Retail Group. The stock had come off dramatically, actually, since its highs a few months back. That's a stock that we see plenty of structural growth. Yes, it's obviously intimately wrapped up with the whole Future Group and what's going on with Future Retail and the expansion of particularly that Easy Day store format. But I see that as being quite an interesting play at the moment that had derated dramatically. So we've been accumulating positions in that for a couple of months. Obviously, the stock's beginning to move now on news about various internet giants wanting to have a stake in Future Retail. That's one of the stocks. The other would be a recent addition as well into weakness has been Small Finance Bank. Clearly a very expensive stock, but one that we think is got fascinating opportunities in its home market, and yeah, it's just geared into all the right areas, underserved, medium to small enterprise lending, incredibly focused management team. So there's various stocks I could talk about out there, but we've used this dislocation and some of these price declines to start accumulating what we would classify high growth stocks, but also domestically focused, but also ones which we think can do very well in the period ahead.
Jonathan, great to have you. Thanks very much for taking out the time to speak with us today.